All right, you guys, welcome to our 5-day challenge, 90 days to better credit webinar. Give me 1 second to go ahead and grab the link and then I'll get started with our presentation for today. The reason for having this presentation is to help you guys kind of get on one accord and to make good decisions concerning your credit. When you know the tools and tricks that are being used against you, you can use them to better and enhance and improve your capability of how you're going to utilize your credit. Um, and that's basically what this is going to be about, right? So give me 1 second. I am refreshing so that I can get the link. You guys go ahead and comment and let me know that you are here with us. All right. I do have the link here. Give me 1 second. And I'll be embedding it where I need to embed it. And thank you guys so much for always giving us some of your time. So today what we'll be going over is good and bad debt, credit, accounts, good credit and bad credit, scores. I know many of you have always understood and heard of, credit as far as how to build proper credit, your credit scores, what your credit scores should and shouldn't be. Thank you for coming. Let me know that you're here. And just credit tactics, right? How to kind of manipulate the credit system in order to get better credit and improve your credit. However, what we want to do is, what my key goal is, to make sure that we can help you learn a little bit more so that you can start utilizing this. Over the next 5 days, we're going to go over some strategic strategies that you'll be able to use to put yourself in a better position as far as how credit works, and then what to look for in your credit report. That'll be tomorrow, so that you'll be able to go through your credit report and start getting some things deleted, right? Sounds great? If that sounds great, go ahead and give me a yes in the comment section. And then again, I appreciate you all for coming and taking this time out to sit with us here today. Good credit versus bad credit. We all know that the credit scores between 800, 760 is the more higher end credit. The credit scores between 680, 759 are the middle range credit. And then anything 680 up into 580 is a 580 lower end up to 680 is okay. But most people try to strive for that 680 credit, 680 credit and above. Those are really reachable if you put together a plan so that you can get there without always having to pay a credit repair company. Tomorrow, we'll be going over some key areas on things on how you can look at your credit report so that you can use the tools and steps to improve it, okay? Some building strategies that you can use to build your credit. We'll go over that on Wednesday. And then Friday, we'll have a webinar every day up until Friday. We'll close out on Friday, right? So be with us here every day, same time, and then we'll go over the strategies to better improve your credit, right? We all know that when market demand is high, APR is high as well. And then when market demand is high, APR is low. When market demand is low, APR is high, right? So that's why we see the versatile in the housing market and purchasing, when you're applying for a car loan, when you're applying for different loans from lenders. If the market demand is high, APR is low, but if the demand If the market demand is low, then APR is high, right? Only makes sense, right? So the thing about good and bad debt is when you're looking into good debt, there is a such thing as good debt, right? However, sometimes we don't really know exactly what is good debt. How do we get good debt? How do we put ourselves in a position where debt is good? How is debt good, right? We often hear, good debt versus bad debt. However, we don't get the information that we need to understand what are some good debt accounts. There are some good debt accounts. Good debt accounts are going to come from those accounts that you use to bill yourself when you don't need credit the most. If you're taking a loan to pay off an emergency, those are bad debt, right? And an installment loan, a revolving loan account that produces positive payment history, that's good debt. Capital lending, money that's in the bank to back any request for funding, those are good debt, right? Bad debt, your bad debt, you're going to be lending that allows you to pay on your account, but not in full. If you're taking out a loan and you're paying off an account, but you're not paying off that account in full, those are considered bad debt. Short story told, Robin P. Emergency saver loans, loans you need to make to keep cars out of repossession, make rent, prevent foreclosures. Oftentimes, those are bad debt. Why? We're taking money for a temporary fix. Those are bad debt. We'll go back over good debt accounts. Some good debt accounts are installment and revolving loan accounts that produce positive payment history. So if you're taking out a loan and you don't need it in order to just simply build your credit, and you have a plan on how to build that credit back or build that account back without utilizing all of the funds, because you don't need the funds, you need the history of their account. And if you can get approved for an installment loan and you can start paying that back with saving half of the money that you pulled out, then you're already at an advantage. But if you take that loan out and you're using it all, you're exhausting it all because of some emergency purpose, and you don't have that type of income coming in every month to pay that loan account back on time every month for the next 2 years, you're putting yourself at a disadvantage. We're going to strive in the next 90 days, in the next 5 days of information, and then you're going to take the information within the next 90 days to utilize to build up your positive credit history, right? So once you pull out that installment loan, make sure that when you're pulling out installment loans, that those loan accounts are only for purposes that you don't really need. When you're going for lending, when you're going for funding, go for reasons that you don't really need so that you can say, oh, I messed up, I want to rebuild. Or you can try the secured loan. However, this is a way to not have to do the secure loan and then utilize the money that you have, that you're pulling out from that loan, say 50% of it, and then start paying that money back. That shows positive payment history as well, without putting yourself into a debt situation. So if you can see how pulling out accounts or opening installment loans or opening loan accounts for reasons when you don't need it is positive, go ahead and let me know in the comment section that that is some good information. And I appreciate you guys for taking out the time to be with here on today. Also, capital lending, capital funding, any type of funding that capital is to obtain to put into your bank account, right? Those are what capital is for. Capital you're going to take, put it into your bank account so that you can leverage it later for whatever type of equipment, growth, or expansion that you want to do in your business, right? So capital lending is money in the bank that you're going to use to show that you don't need that money, that it can sit there over the course of a couple of months, whether it's 3 months, 6 months, or 12 months, sometimes 24 months. The more that you have the money in there, even if you use a little bit of it and 90% of it is not being used, you're going to show capital. And then when you get ready to go and open your brick and mortar and you need some type of funding to back that, just because you have that money don't mean you want to use it, right? You're going to go apply for funding. When you go apply for funding, they're going to say, do you have any capital? Do you have any cash on hand? What type of assets do you have? That capital acts as your assets. That acts as you backing your accounts. Hey, I don't really need the money. However, I do want that portion to go strictly into building, expanding, remodeling, hiring, and setting up our system for our office. However, we have 100,000 sitting in the bank to back your 100,000. Does that sound good? Does that sound like putting yourself in a position where lenders want to do business with you and with your business? That sounds really good. So that's how we utilize good credit accounts. And I apologize, and I'm sorry if I went too fast in the first beginning, but I did want to go over that for you guys. And then bad debt accounts, of course, we went over that. Lending when you're looking for emergency purposes as well. What can be done about it? Make sure you are taking out funding. If it's not for an immediate temporary fix, don't take out funding. If you're taking out funding for an immediate temporary fix, 9 times out of 10, you're in debt. You're already in a bad situation. So what we've learned from over time is if you're in a bad situation and you pull out money, guess what? In a cycle of bad debt. So that's what you can do about it. You cannot continue to pull out money, but make a plan for if you cannot afford a car loan for some type of emergency event that came up, make sure that you have a plan. If something happened, something came up that prevented you to be out of work for 2 weeks and your payment is due, you should still have that money, because guess what? You have only been out of work for 2 weeks and you're getting a check. However, if you've lost your job for a month and you're looking for a job and you don't have emergency money saved up to pay this account, you have to be sure that you're either going to get back into work, you're calling up your lenders, and you're speaking with your lenders so that they can roll over the loan to the back of the account for the next 30 days so that you won't get a late payment. These are some things that you can do to prevent negatives hitting your credit report while you're in a stressful situation. However, good money habits produce good results financially. You're putting yourself at an advantage versus a disadvantage to being able to make these things in emergency situations, making payments in emergency situations. Okay, if that makes sense, go ahead and give me that makes sense in the comment section, because I know we're teaching something different here. We're teaching you guys how to actually use the information as an advantage to you guys, right? There's so much disadvantaged information. There's so much misinformation out there. There's so much information that people are withholding from you guys, and that they're not giving you everything that you can use just for free to better yourselves and put yourselves at an advantage, right? As a community, we suffer from not just lack of knowledge. So I'm not just going to say lack of knowledge, because it's not lack of knowledge, right? But access to the information that we need to put ourselves in a better position, right? We suffer from lack of access to information to putting ourselves in a better situation, right? So the more that we can get this information into the hands of each other, the better that we're going to put our community in a better position, right? Next, I want you to have a plan for your funding. We went over that. Have a plan for the type of funding that you want. Don't just take out the account to patch up the water hole with duct tape. If you're trying to patch up a hole with duct tape and that pool or whatever you're patching up is wet, eventually it's not going to stick. Maybe you can dry it off, you can patch it up with some duct tape, and it's not going to fix unless you fix it with the proper equipment, right? So I want to give you guys the tools and the information that you're going to be able to utilize in order to put yourself in a better position and enhance what you are doing in order to have better credit. This week, we're working on better credit over 90 days. For the next 5 days, we'll be working on tools that you can use to better your credit in 90 days. Given the tools and information that we're going to give you guys take that information and go ahead and start putting yourselves in a better position overall. If you're in an emergency situation financially, understand that that's okay, but make a plan for the next financial move you need to make in your lives or in your business. Okay. If you guys have any questions, my information is scrolling at the bottom of the screen. You can reach out to me via text message. You can save my number under the tax coach or the credit coach, and you can go ahead and text me. We will respond. Our number is 1-855-944-3775. Again, that number is 1-855-944-3775. And we do respond one business day. You guys have a great Monday.